Good morning, everyone, and welcome to Paul's Breakfast. We are joined by a good audience on Zoom as well, and they are represented by this nice tower here. So welcome. You're missing out on the 3D experience, as Ken Block was just telling me. So join us next time here in person if you can, but I know in some cases you are not in Dallas, so we're glad you're joining us. Here's our agenda and our pledge to you. Number one, you will see two entrepreneurs pitch this morning. Number two, you get to, we share our calendar with you, and that is whatever else is happening around town. It is not a complete calendar. We have one online that's much more complete, but some events around town and elsewhere that are relevant. Number three, you obviously get to network, and Zoomers are missing out a little bit, but we have a LinkedIn group for everyone here, and especially was brought to fruition during COVID, that allows you to join only if you join one of our events. And that means you do have something in common, and that is you have attended one of our events here at Health Law Catters in person or via Zoom. And number four, usually that's last but not least, we of course have a great program for you here today. And so you will learn about the London Stock Exchange today and have a discussion here on that. So that's our agenda. We tend to get you out of here by 9 o'clock Central Time. It might be a couple of minutes later today, so bear with us. We have memberships at Health Law Catters if you're interested in that. That gives you co-working access and things like access to events like this, and we're obviously always happy to have you join us in our facility here in downtown Dallas. We have a couple of announcements. Number one is we have a Women in Science and Healthcare Hackathon in January, also called WISH Hackathon, and we're looking forward. This is our 5th hackathon that we're sponsoring. It's sponsored and supported by Lyda Hill Philanthropies and Biotech at Pegasus Park and the SBIR. We're adding several more sponsors to that to make it really a blowout event. This is the second in a series of Women in Science and Health Hackathons. Last time we had it in person before COVID, and it was a lot of fun. We had more than 100 women come up with innovations here over 48 hours at Health Law Catters. Our other announcement is that next week, is that next week? It is next week. Amazing. Next week, November 11th in the evening, we have our pitch day. This is our 9th pitch day at Health Law Catters. Actually, it's our 10th pitch day. It's our 10th pitch day because we split it one year. Join us here in person. This will be a great evening with 10 startup pitches. You're getting a little bit of a preview today because 2 of our entrepreneurs that are presenting are also going to pitch next week. But join us here. It's a great evening celebrating entrepreneurship, not just in Dallas or Texas or US, but beyond. Our startups come from Italy all the way to California this year, and you'll see some great innovation. Follow us on all the Facebook, Twitter, LinkedIn, and anything else you can find. You will also get the LinkedIn group in the chat so that you can join it, and we will admit you as we know you have participated in one of our events as a thank you to you. Our calendar, like I said, pitch day coming up on the 11th, and SMU Cox actually at the Park City Club. It's called the Southwest Venture Forum. Takes place on the 11th in the morning. So if you want to have a doubleheader that day, it's going to be a great event in the morning. The sign up, I think, is on our website as well. Then Launch Bio has an event on the 16th of November. And then, like I said earlier, our next event is the Texas Healthcare Challenge WISH Edition Hackathon in January. We actually do think we have one more pulse in December as well. I think we might not have to fix the date yet, but I'm quite sure that Chris Crow will come and speak. We always say thank you to our sponsors. We are blessed to have a lot of, many of you probably online as well, a lot of our sponsors that allow us to do these things in the community. And without their help, we could be bringing this program to you on an ongoing basis. And our sponsor for this series is DCO. That's our media sponsor. And if you don't know DCO Healthcare, it's the best informed healthcare electronic newsletter you could get on a daily basis, and obviously it's connected to the DCO magazine group. So it's a great list to get on if you want to know what's happening mostly in the North Texas region in healthcare and health innovation. It's my pleasure to introduce Geraldine Schott. She is the Trade and Investment Officer for the UK Department of International Trade. I had to write it down, it's a long title. But here she is, she'll give us a quick overview and then we'll kick it over to our panel.
Well, thank you, Hubert, for bearing my title. So yes, as Hubert said, I'm a British government employee. I work for the UK's Department for International Trade, and I work out of the British Consulate in Houston. And I specialize in the life science and healthcare sector. So what we do as the Department of International Trade is that we help US companies access the UK market in our various sector. For me, it is the life science and healthcare. So when I mean market access, it encompasses the accessing our healthcare system, the NHS. We do a lot of work around clinical trials and facilitating companies' experience running their clinical trials in the UK. The UK was at the forefront of the COVID response in terms of how we brought therapies to patients around the world. So that's one of the aspects that we cover, but we also offer a wide range of support for anything business related. So I have a few listed on my slide, but we'll organize trade missions to the UK for companies that are interested in visiting and interacting with both academic and industry stakeholders. We'll also provide access to talents, market information. So we'll provide a market analysis for companies if they're interested. And we'll also work as a connector, again, with both academic and industry stakeholders. So I won't take much more of the time on the stage today, but please contact me if you have any interest in the UK market. I put my contact information. So I'll leave the stage to Chris now.
Give me real quick. Thank you, Geraldine. And now I'm going to introduce Chris Mayo here real quick. Chris has helps companies and investment managers from the Americas access capitals through equity, debt, and fund listings on the London public markets. He's got over 20 years experience doing this. Worked for Barclays, Sullivan Smith Barney, Schroders, and has executed on IPOs, financing M&A, transition in the US and Europe. Was a primary market specialist before that, and has degrees from both Ashton University and Columbia University as well, and is a CFA. So, Chris, I'm going to kick it over to you to run our panel. Thanks for being here. Let's give him a round of applause.
Well, thank you, Hubert. So I'm not going to introduce myself because Hubert's done that very ably. You can look me up on LinkedIn. Please connect if you feel like it after you've heard what I've got to say. And my contact details are on the slide that you can see there. So I just thought I'd jump right into it before we get to the start of the show, which is Bob, the CEO of Belluscura, with Michael. We will be having a great chat. So what I want to get across here, I'll be really quick. You know, what's different about London? Why as a US company should you consist, and why as a US healthcare company should you really be looking to London to raise capital? London has a really supportive environment for smaller companies in a way that the US really doesn't. In healthcare specifically, we really have carved out a niche outside of biopharma. You'll get a good example of that today with Belluscura, that's Bob's company. I think also it's important to understand that the cost of going public and staying public in the UK is much lower than the US. I think it's a key point. I think there is a view here that being public is a very, very expensive enterprise. I'm not saying it's cheap to do it in the UK, but it's certainly much less expensive than it is in the US. And the litigation risk is also much lower in the UK. We can give companies ongoing access to capital. I'll give you examples of that from the healthcare space later in this presentation. And we are the most international market in terms of foreign companies listed and also the composition of the investor base. It's not just UK investors, investors from all over the world invest in the London market. And investors are very used to seeing foreign companies, including those from the US. Kevin, next slide, please, Lindsay. Well, it won't come as a surprise to you. London is the dominant market in Europe for equity capital raising, but still on a global scale, outside of China and the US, we are the most important market after those two countries, which is probably not surprising. China and the US, biggest economies in the world. You know, the UK actually punches above its weight. Our economy is only probably seven times, the US is 7 times the size of the UK in terms of their economy, but our capital market is disproportionately larger compared to those other markets. Next slide, please. And as I said, we're the most international market. We've had 78 companies from the Americas listed in London since the start of 2017. We have more foreign companies listed than any other single stock exchange. And so investors are used to seeing companies from international, from foreign countries listing in London. Next, please. And of course, from the Americas, it follows. So this slide gives you an example of lots of different sectors. I'm going to focus in the later slides on healthcare, but what this slide gets across to you is that we really cater to all kinds of sectors. I want to pick out one particular deal from this. Devolver Digital is a company that's listing this week. It's from Austin, Texas. It's a tech company. It's in the video game space. That will be the largest US-based company ever by market cap to list in our growth market AIM. We have AIM, which is our growth market, and we have the main market. They're both under the London Stock Exchange umbrella. It's a bit like having NYSE and NASDAQ under one umbrella. Not a perfect analogy, but something kind of like that. And I'll explain a little bit of the differences in a second. But Devolver will be the largest company, $952 million market cap. But to be honest, we actually usually cater to companies much smaller than that, and I'll get to that in a second. Next slide, please. Here's that slide. So what you can see is AIM, which is our growth market, caters to much smaller companies. A typical IPO market cap IPO for companies on AIM is $100 to $150 million. Is a very typical number. Whereas if you look at NASDAQ and you look at NYSE, the numbers are ever increasing. So if you think about NASDAQ, actually, the numbers there are brought down by SPACs. SPACs tend to be smaller. Obviously, you're just raising cash, usually a couple $100 million. If you take those out, the company that's typically going public on NASDAQ is now multi-billion dollars in size. On AIM, they tend to be much smaller. Belluscura, which is Bob's company, they're an example of a small company from the US who are able to take advantage of this side differential. It's important to also say that these IPOs, these small companies that IPOs, tend to perform much better in the UK than they do in the US. As an example of that, Belluscura is the best performing IPO on AIM, our growth market this year. It shows you the kind of receptivity you can get as a US company to London. Next slide. A couple of differences. Cost. It is much less expensive from a placing fee or underwriting fee, so what the banks charge. Accountancy fees, lawyers' fees, much lower in the UK to go public than the US. Also important to say that we rarely see IPO pop, that which means what is the increase from the offer price in the first day. We're seeing very large increases in the US. That's very unusual in the UK. And that's because we have superior price discovery mechanisms. It's easier to meet investors prior to your IPO roadshow in the UK, what you would call testing the waters in the US. It's much easier to do that in the UK. You don't need to have a draft registration statement, which would cost you a lot of money in the US to get to that point. It's much more flexible in the UK. You're able to get the feedback, you're able to set a better price range, and you'll be usually priced within the price range that you stipulate in a way that does not happen in the US anymore. I also talked about a couple of other things there. Litigation risk is much higher. You can see the stats are astonishing on the last row when it comes to the differential and litigation risk between the two countries. It's actually relatively unusual to be sued as a public company in the UK. Also, half-yearly reporting, so twice a year in the UK versus quarterly in the US. That reduces the burden on the finance and obviously the other members of the senior management significantly. Next slide, please. You also have access to really high-quality institutions. Some of the names there, hopefully you'll recognize. These are the investors that typically invest in AIM, our growth market, those equities. I think it's also important to say, and I think that Michael and Bob will go through this a bit later. We have both high net worth individuals and also tax advantaged investors that invest in things, something called EIS, Enterprise Investment Scheme. and VCT, Venture Capital Trust. They are key players in AMR growth market. And those investments have tax breaks from the UK government. And if you are a US company, you can actually still be eligible to be invested in by those kind of investors. So that's a huge opportunity for you. Next slide, please. And just a couple of examples of healthcare companies that have gone public. We'll talk about Belluscura in a minute, but I want to just pick out the ones on either side there. Maxite on the right-hand side was a company from Maryland in the gene therapy space, listed in 2016 on AMR growth market with a $43 million market cap. It's done a number of follow-on financing since then in London, and in this summer listed on NASDAQ, raising $185 million at a $1.2 billion market cap. I've actually not wearing my glasses. They're now $1.1 billion. Just shows you the growth that they were able to achieve on AIM and then use that as a stepping stone back to the US markets. Next slide, please. And these are just examples from the last 12 months. Verici Diagnostics Company, Trellis, which is a digital health company, Spectral MD, which is also from Dallas, which is a company which is in wound care, and Lung Life AI, which is the diagnostic company for lung cancer. You can see the size of companies we're talking about. We're typically talking about companies from the kind of 30 to 100, 150 million dollar market cap range, raising 10 to 50 million dollars. These are typical sizes. So these are deals you wouldn't see in the US, and we're able to support much smaller companies. And we go to the final slide, please, Lindsay. Renalytics is a good example. Like Maxite, they've used the UK market as a stepping stone back to NASDAQ. This company is from New York. Actually, the CEO spends most of his time in Utah. They listed on AIM November 2018, raised about $30 million on an $85 million market cap, give or take. Then did a follow-on 6 months later to raise further capital, and then were able to list on NASDAQ in the I think July 2020, do a follow-on offering on NASDAQ, and is now a company that's grown from $85 million to $825 million. There's another example of how we can support smaller US healthcare companies in their journey and give them access to capital. So that's it from me. I just want to pass on to the stars of the show, so to speak. We've got Michael Crawford from Edison Group. We were supposed to have Rachel Carroll. Unfortunately, American Airlines sabotaged her efforts to get here from New York yesterday. She sent her apologies. But fortunately, her colleague Michael Crawford is here to lead a discussion with Bob Rauker, who is the CEO of Belluscura. So I'll pass on to Bob and to Michael. Thank you.
Kick it off. I appreciate all of you coming out today. Just a quick background on myself. I'm Michael Crawford, SVP of Investor Relations at Edison Group. We're one of the largest investor relations equity research firms globally. We represent probably north of about 400 different publicly traded companies trading on probably more than a dozen different exchanges across the globe. And market capitalized, we represent companies anywhere from $100 million market cap all the way up to $10 billion across probably north of about 10 plus sectors. So again, that's just a quick background on Edison. I have a number of questions to ask Bob today. Bob, really appreciate you taking the time. If you just want to give just a quick intro about Belluscura, and then we'll move on to questions. I'll be reading questions off here throughout the course of the panel.
Sure, no, appreciate it. Happy to be here. And Belluscura is a 5-year-old company, and the role is in the oxygen enrichment space. Unfortunately for the world, but fortunately for us, we were in the oxygen enrichment when COVID hit, which definitely benefited the company. But we had a lot of nice technology that went back 10 years. The research was originally developed by a company called Separation Design Group. We did a joint venture with them and developed the technology we have. And we can go over the questions and stuff like that. But essentially, we launched this year the product and continue to move forward. It's been exciting. I can't tell you how wonderful the experience has been on the game with people like Chris and stuff like that. My prior background was with very large corporations. I've done work on the Swiss exchange, the US exchanges. So I'm very familiar with all the other exchanges, and the experience on the game has been outstanding.
Great. So we'll just dive into a couple questions here. So obviously, you're a US company that went public in London. You must have considered other financing options prior to the decision to go public. What really triggered the decision to go public, and did you explore U.S. financing options?
We did. I think the key thing that, and we've spoken a lot, Chris and I and other and folks, is in the U.S. we're finding that, as we showed in these other slides, there seems to be a void in the United States for companies in this that are trying to raise, 5, 10, 15. Speak up a little more.
Towards this microphone.
Okay. 15 who are trying to raise 10, 15, 25 million dollars. You can usually get angel investors. The problem is what we ran into is we did look at U.S. funding and opportunities. We kept running into the issue that we're a 20 or 30 or 40 million dollar company, and the investment loads that people want to put in at 10, 15, 20 million were just too big. They would own too much of our company, and it just violated their internal house rules, so to say. At minimum, it's neat technology, we like it, but our minimum investment is 10 or 20 or 30 million, and they don't own 100% of our company. So that's when we had brokers in the UK. We're a little bit different in that we were originally started. We started in the UK path. It was spun out by a UK company, but we did look at venture capital in the US. We met with a number of people and private investors and things, but we headed down the path because we saw a very nice pathway. We met with Chris and his team early on, and it was the right way to go.
Yeah, I mean, from my experience, a lot of U.S. companies, specifically where you have market cap, kind of their main focus, if they want to list of U.S. is NASDAQ. Why sort of London over NASDAQ?
But I mean, the NASDAQ, the cost is huge, and for us, I mean, roughly our numbers, we're a couple 100,000, maybe 400,000 altogether. Sounds like a lot, but it's pennies compared to what we would have to pay on the NASDAQ. An interesting thing that I'd like to point out that Chris talked about litigation. My background is I am an engineer and a patent attorney previously before becoming an entrepreneur innovator. One of the things that does drive that's unique about the AIM is we have a nominated advisor. And that nominated advisor is a person that kind of works for the AIM and works for us and kind of polices what goes on. And it gives a lot of confidence to people investing in smaller companies that this person is reviewing when we put out our press releases and check. We have some stuff coming out here shortly that he is and their group looks at. And so I think that gives a lot of confidence. I do think that's why despite the different markets, different litigation, because they are reviewing stuff. It is a benefit. Sometimes it's a little, it drags things out a little bit, but in general, it's a good thing. One of the reasons I think that we chose the AIM is just the structure was better for a smaller company, which doesn't have all the resources.
And then just kind of, the whole going public, what stage are you at when you did go public? Generate revenue, are you profitable?
Sure. I think a key thing in London, I think we found with when we were investing, they're actually very keen and knowledgeable of the US FDA process and things like that. The people, they asked us about, do we have reimbursement? When will we be launching? What's our cost? All those types of factors went into it. And it was probably, we really pulled the plug of us. We had to have FDA clearance. That was a key thing for us. Not everybody does, but most investors want that FDA clearance in place, and at least a strong pathway to how you're going to get there, and a pathway to revenue. And that's to our. We've been told that the investors that came into us, one of the reasons their share price has moved up is we laid out exactly what we predicted we were going to do when we would launch, we would get it. And I think that confidence gives shareholders a lot of confidence that we get the targets that we set.
And then just with respect to the IPO, how much money did you raise for the IPO, and what was really your valuation?
I apologize. I have to try. I always laugh. It's pounds to dollars, but I think it's about. We were at 45p. I think it was about pre-IPO. I know it was a 15p price, and we went to 45. Chris, I'm looking at you like, is it 35, 40 million? I think was $50 roughly. Was a pre-money valuation. I know after the IPO we were at about 68 or 69 million dollars. So subtract 24.9. That's what we raised. I apologize. Once we raised, we're off to the races. We're already going for launching and moving down the pathway. We raised enough basically so that we'd have 3 years of capital, and that was the goal to not have to come back to the markets. Shareholders don't like that. You have to keep coming back unless you've got a certain valuable purchase and stuff like that. So we raised 17.5 million pounds to the conversion. It's about just under $25 million.
And then let's talk a little about the going public and the IPO process. We alluded to it before. We were just asking a couple of questions, but kind of how long did this process take? Things like pre-roadshow activity, things of that nature. If you could just kind of walk through the process of start to finish and how long it took, what was kind of included in that process.
So we went IPO the end of May, so basically a 6-month process. We started in December, basically starting some of the pre-roadshow stuff. We did not have FDA clearance, but we had submitted to the FDA. We had a pretty good idea that when it was going to occur within probably about 60 to 90 days. And that's when we started meeting with people, got more involved, soliciting our what we call the Nomad. Our brokers started meeting with people. We finalized what's called, as Chris alluded to, our EIS, which is the Enterprise Investment, which is a wonderful thing for UK investors that we were eligible for. And I believe for us, we could take up to 20 million pounds, which is roughly $30 million. And this is money that either whether it's through BCT or EIS, but it's roughly about a 30% tax rate for these people, depending on the situation, they can invest in a company. So it does bring in a lot of interesting high net worth people. And that's part of the roadshow. It wasn't just venture capital, but also to high net worth individuals want to come in. And so that process, and then once we hit the FDA clearance, that's when we pulled the official trigger, finalized the S1 equivalent, the Pathfinder, and then started doing our roadshows, which, as Chris said, we also kind of felt out what would be our pricing, when would people come in. And we had a real good comfort level going in. It was oversubscribed. We had to pull back. We originally were trying to raise 15 million pounds. We raised at request for a lot more than that. We capped it at 75. But the whole thing was about, when we really pulled the trigger, it was probably about a 2.5, 3 month, which was fast.
Yeah.
But it's very well laid out by the London Exchange. Does a great job and works with the Nomads, and they have a lot of conversations back and forth. And so it was very clear what we had to do.
Great. And it's just kind of, I know Chris alluded to this more of a broader sense, but just you specifically, how much did it cost to support the IPO process?
I think it was roughly about 400,000 to maybe 450,000. It's a little bit hard because we started in December. I think it's probably a little less expensive if you were a pure UK company, because you have to pay for both US and British attorneys and things like that. But it wasn't a huge cost. NASDAQ would be double, 3 times, 4 times, whatever the number is. It's much larger. And as you allude to the fees that the brokers and everybody else are less and stuff. In general, it's significant. It's not just what it costs. Some people will gasp, "Oh my gosh, it's a lot of money." But I don't want to say it's pennies on the dollars, but it's significantly less than they go on. And then just the cost to maintain a company on the NASDAQ is significant. All the various things. It's not to say that it's a Wild West on the AIM, but we have the structure and stuff. But it's just I personally think it's a better run situation.
Just kind of shifting gears a little bit. Let's talk about, I guess, from the UK ecosystem and the investor base you've been introduced to. Can you sort of give some examples of maybe institutional or AIM funds, private wealth firms, high net worth individuals, mentor in the IPO process? I guess talk a little about the audience.
The audience was varied. We had both people from the UK, we have people from South Africa, Germany, quite individuals. We have some venture capital institutions, I probably is a better word, that came in. So it was a wide range of individuals that you meet with. If you're thinking about it, you want to be prepared. It's the people are obviously very well educated. They're big into healthcare. They like to see something and understand the markets and where you're headed. It was just we did pre-roadshows. Some of them we do. We've had a number of them that did not come in into the investment that have now contacted us asking if they can come in, but we've told them we raised for 3 years. Sorry. So it's just kind of the reality of it. But we've had some great early on. We've had some great individual investors who, they've done very well. Some of them had a 7x return on the money already. So it's a good ecosystem. There's just a wide range, and it's not just London. It's up into, Scotland and everywhere else. It's a broad ecosystem, a lot of different well-educated investors institutions.
I know we talked a little about the BCT and the EIS. How relevant were those tax advantage investors during the process?
In our case, they were, I don't know the exact number, they were about 50% of the investment that came in. To me, it's a little bit of a complicated tax. There's nothing similar to it in the US. So some of them are eligible, some of them are dead, some come in through different ways. But definitely a lot of ordinary people, their retirement funds are tied into the EIS. So it gives them an opportunity to come in on a company, which, quite frankly, a lot of people in the US can't come into a company like us. We would all be bought up by the brokers. Initially, it'd be hard. People complain about, but I can't get into an IPO. And to me, it's kind of a fun thing talking to people and who get to come in. And they talk about in our case, they talk about a grandmother or a father that who had COPD, and they're just amazed with this product that we built. And they're just excited to be part of something that has meaning to them. So that you get in touch with people. It's a different. It's smaller, but it's still very large. It's a $7 billion IPO. We got a lot of companies with the same.
As you indicated before, you were a pre-revenue company when you IPO'd. What were some of the questions that investors were asking you? Were they pushing you for any kind of metrics or milestones sort of shortly after the IPO? Or some of the ones that I guess was the challenging questions, or some of those questions that were kind of asked the most on the process?
Sure. I think the biggest questions, well, when you do an IPO, we can't do any forecasting. We can't do any financial forecasting. That's through a brokerage house and stuff like that. We can give an idea of when we're going to be profitable. A lot of them ask questions. They want to know things, the cost of the product, what's the market opportunity, as we talked about, what's reimbursement for a medical company. Nobody likes to hear the story that it's $1 billion market. We think we can get 2%. They want to know how you're going to do it, why your product is differentiated, what's your patent position, what's your infringement or things like that. And so it all ties into, I think there's a very well-educated lot of questions. Probably the biggest question what's going on that everybody asks now is supply chain, because it is a large issue. It's impacting everybody in the world, and right down to people trying to buy laptops. So we recognizing that, we have a great team that we've brought on. It's very familiar with the supply chain and stuff. We manufacture in the US. So we actually I wouldn't say preemptive, but we started planning way ahead out of concern, knowing where we wanted the company to be, where we thought it would be. We started, I want to say, stockpiling. We started doing stuff way ahead of time. There's even something as simple as injection molds, the aluminum blocks, coming out of China or someplace, or coming out of someplace else. It gets held up in a shipyard. So you try to think of everything possible. And that was one of the big questions that a lot of people asked. What are you going to do? We're starting to see all these slowdowns. That was probably the most difficult one. We had we think we had a good plan so far. We're doing great on meeting that, but it's
Great. And just, I guess top of mind, how important was the company's application COVID treatment to its equity story?
It was big, but I mean, the market that we treat is COPD. It's the #1 killer in places in Asia. It's like number 3 or 4 in the world. It was already I don't know the exact numbers off the top of my head. It varies. It was already a $4 or $5 billion supplemental oxygen market. COVID certainly is impacting it, but we're seeing more and more use of oxygen. So for us, it was just already a large market. COVID's had an impact definitely. And one of the biggest things that we would hear a lot about is people with some of the shortages of oxygen, and hospitals trying to discharge people with supplemental oxygen. So I wouldn't say it didn't benefit us, but I think most people looked at the larger market that was already getting systems with it. That was the COPD market, other supplemental oxygen.
Just going back to more, I guess, on the investor side, clearly your stock has performed very, very well. How have broadened the pool of addressable investors? I guess post IPO, what has been your process throughout? If you could talk, what's, I guess, you would say the balance between, I guess, health
So at the moment, when you IPO, just like the US, we have a lockup period with most of our major investors. So about 60, I don't know the exact number, 60, 70% are locked up for now. They're either insiders or own a large enough portion of the company that they're locked. So we only have 30, 35% float. So we haven't been actively trying to diversify. We have a good, strong base of people. We have a lot of people that are long-term holders in the company that want to. And so the lockup period expires, and then there's a soft kind of rollout after that for another control that I can't think of exactly what it's used for a year after that. And we'll look at various companies. We've been approached by quite a few different institutions and stuff, and that'll be kind of a process that we'll address in the spring and see what we want to do. There's all types of things that go on with us that may change what we want to do, but there's no target towards healthcare or something else. We've had tremendous investors with no ties to investor early on. Been very pleased, and other healthcare ones that said, "Nah, we focus on biotech." So just a wide range of things. We look for people that want to be, for the most part, long-term holders. It's like any startup. It's nice. Your stock goes way up, and we hope to continue to goes up. We have a lot of work. We just started. We just launched. We've got tremendous demand on the product, and we have 2 more products to launch next year. And big portfolio, so there's a lot of activity going on.
Yeah, that's it for a number of the questions that I have. Kind of just last one. What advice would you give to a company considering the London market?
If you're thinking about it, obviously have your, they would say, ducks in a row. I think reach out to Chris and see, and he can refer you to or help you, guide you a little bit. He can tell you what to do. But and he was very helpful with us, giving us suggestions and talk with bankers who are familiar with it. You can get that information in brokers and folks like Edison and stuff that have tremendous knowledge. You can learn a lot from them, just how to move into that market. It's people kind of get scared because they say, oh, it's over in the UK, and I do spend a lot of time over there. It has to do with so many of the private investors and some of the stuff we're doing. We're also technically a UK company. We actually have an office there now, but you don't have to do that. A lot of these companies, it's a handful of meetings a year in London, shareholder meetings and things like that. You don't have to. Chris can tell you more of the specifics of what was required and stuff like that. But you're seeing, and I know some of the people also that have come on, or everybody I've talked to, it's been a very positive experience listing over there. Very well received. I can't ask for any better care, if they're received.
That's it for my questions. I think, Hubert, if you want to open up maybe.
Yeah, well, let's open up to the audience here first. So if anybody, oops, yeah, so I should be elsewhere. Go ahead.
You had to go through this process to get it ready.
So let's repeat the question just in
So
case.
was there anything we would do different? I can't think of anything off the top of my head. We, like I said, we have been spending a lot of time in London. Our early angel investors were UK people, so we probably had a little bit of an advantage over other companies that just go there. So if I was just starting fresh from here, yeah, I mean, I would definitely spend some time looking at who's on the AIM. If I'm a healthcare company, who else is on there, and talk with, reach out to some of those same people and interview them as far as their experience, and learn from their experience, because they've all represented different companies, unfortunately, that have not done well. And they can tell you some things. They can tell you things that they saw why that company maybe didn't perform well, or why they failed listing and stuff like that. That's probably the best advice I could. We haven't experienced anything. We've had a good experience. I mean, I'm sure if I look down the list, there's probably things I do differently, and I wouldn't probably have listed on Memorial Day, and stuff like that, which they don't celebrate. And but yeah, so those are things that have changed. I don't know if Chris has anything.
Yeah, go ahead and take a seat, maybe.
Yeah. Funny, we don't celebrate July 4th. So I have lived here since 1999. So despite my accent, I'm probably quite American in my own. The one thing that Bob was talking about, I think is quite interesting. He made the point you don't need to. Belluscura is a UK incorporated company. You do not need to be a UK incorporated company to IPO in London. For instance, some of the examples I gave, Maxite, Long Life, Spectral MD from Dallas, they're all US incorporated companies, usually Delaware, but not always. And you can list the ordinary shares of those companies, and you can use US GAAP on London. So you don't need to reinvent the wheel. You don't need to incorporate. Some companies decide to do this for other reasons. There may be efficiencies in doing so. I think it's also important to say to qualify for tax advantage investors, such as EIS. Again, you do not need to be incorporated in the UK, which may surprise some people. For instance, Maxite use this scheme heavily, and they're still a Delaware incorporated company. And so the pathway should hopefully be relatively smooth and not require extensive corporate restructuring.
I do have a question. One was just on the slides and whether your slides are we allowed to share your slide. Okay, so
We can
with the registered participants, somebody asked.
Absolutely, yes. And I think also Edison put out a report yesterday on the UK market and the IPO environment there. It may be worth that's public. That's public information, but it'd be good to send out with that. We can provide that to you. It's quite an interesting fact.
Okay, and then we have another question here from Terry Russell. I think some of this was covered. Maybe if you can just sum it up again. If a company is geography agnostic, how much easier and cheaper is it for a UK entity to go public in London versus a US entity? So I guess, is there an advantage for your homeboys? Is how we would phrase it here.
I would say
July 4th and all that taken into consideration.
It's going to be I think it's slightly easier as a UK PLC, and also from a kind of corporate structure. So, for instance, we have a number of differences in corporate law that the investor base will be more used to when they look at UK companies. So, sometimes what we'll see is US companies that want to remain US companies, they may make slight changes to their articles of association to make them look a little bit more UK-like without actually having to reincorporate into UK PLC. I'd say at the margin, slightly easier to go with, but Maxite, Delaware incorporated company, grew from 43 million to 1.3 billion dollars on the UK market, and no one was complaining about the fact that they were a Delaware
Okay,
incorporated.
and I guess if you wanted to, you characterize the companies that go public a little bit earlier, but if you wanted to kind of put your bullseye on, hey, this is like the perfect company, how important are revenues? Because I know you have pre-revenue companies as well, and I mean, kind of, if you had to say, here's the stereotypical company, and we can build around it, and here kind of the boundaries of where we think you kind of pushing it, and we don't see the success, or you're too big and the market's I mean, probably too big isn't so much a problem, but
yeah, I mean, for instance, Devolver from Austin, obviously that's in tech, so that is a revenue generating company, and its market cap will be about $1 billion. But in life sciences, we tend to look at things, and actually tech, we look at small things as well. I'd say the typical size is probably $50 million market cap to $250 million in this space. I put up a slide of the recent US-based companies to go public from healthcare. None of those have revenue, but they were all outside of biopharma, or at least had part of their business outside of biopharma. I would say that it's harder to go public in the UK. It's not possible, it's harder. As a pure play biopharma, where you've got kind of binary clinical risk, there is, I think, much more receptivity towards diagnostics devices companies perceived to have simpler pathways to approval. Now, do you have to have FDA approval? No. I think obviously that's the valuation inflection point. So if you do have it, you're going to get a better valuation. But I know that, for instance, companies like Analytics I think, well, I don't know if they actually have approval yet. They are still some way. They were a long way. I think they're around about having approval now from an FDA perspective. Polarian doesn't as well, one of the other companies I mentioned on the slide. So, I think there's receptivity to all kinds of company and all kinds of maturity. There will be a valuation implication if you are less further along. Now, Bob's company has got FDA approval. It's in the commercialization stage, obviously their valuation will benefit from that. So I think that's the way to position it.
Okay. See if we have questions in the room. Go ahead.
Yeah. Chris, I thought I heard you say a little bit earlier that you provide these small companies entering the market with ongoing capital support.
So what I mean by that is that a lot of people think, oh, if I'm a small company and I'm going public, it'll be very difficult for me to raise follow-on capital. I think that what people need to understand is that the investor base in the UK, if they're investing in you and you're delivering on your business plan, they will be there for follow-on raises. Obviously, in healthcare in particular, there is an expectation that you're going to need further capital. So, just to give, we'll see what happens with Bob. So, he probably needs to, keep that under his kind of, not mention any of his future plans, but I could talk about what has happened with companies. And, Renalytics, as an example, raised follow-on capital 7 months after their initial IPO. Maxite raised the capital 5 times before it went to raise money on Nasdaq. So the follow-on capital was there as long as you were delivering on your business plan. And the thing I would also say is, and this more applies for revenue generating companies in tech, that it's harder to do for a revenue company in healthcare. If you've got incumbent shareholders in revenue generating companies that have been in for a long time, for instance, angels or high net worth, it is much easier in a growth IPO subsequently in the UK for those investors to partially exit. Now take Devolver as an example, which is a revenue generating tech company in Texas, IPOing on Thursday. Something like 80% of their deal size, which is about $260 million, is actually going back to the founders. We've been in that business for a long time. They're taking money off the table. They'll still have skin in the game, and therefore the investor base is happy for that to happen. That is easy to do in the UK.
Okay. We got one more question.
I thought it was interesting when you said we're generating interest from potential investors, and then the update clearance came, like that was the trigger. But was that a strategic decision? Like instead of let's get the clearance first, then go talk to investors and say, look, we can accomplish it. Or did it just timed out that way? Yeah, we planned it because people have been waiting for when we were going to get clearance. Some of the early investors and a lot of people. So it was timed. We planned it that way. We had a pretty good idea of when it would the FDA would be able to clear. They were backlogged with COVID and a lot of the vaccine stuff, and we kept losing our examiners to work on. I'll say more important things, quite frankly, oxygen. We were an expedited review because we're a COVID-19 treatment, but we clearly were a vaccine. And so people knew that we felt pretty good about it. So you wanted to prime them ahead of time, but it gives a good idea of where we would be pricing it at, what people would be comfortable with, and you can sit there and talk about where we think the market will take us, where we think the pricing of the product itself will be positioned. So that way you had a pretty good, we got a fairly large at that time group of people that, and we have the more formal roadshow. And I would add the other thing I was going to say, as far as we've already had institutions come to us who did not invest come back, but one of them, as far as follow-on capital, has already asked, hey, would you be interested in raising more capital to go acquire somebody or expand into this area? We said we're all set for now. That was last week, and things may change. But yes, that's the whole idea that there is quite a few people that institutions that want to be coming in doing well, and their expectation is it's not a launch package. So there's a lot of capital in the UK.
Okay, I think you guys will still be around for a little bit, so let's thank our panel. Just answering the question again, the slides will be available. We'll lean on you, Chris, to get that report, and we could attach the link of the report to send this to all who registered today, so you get Chris's slides and also the information on the London Stock Exchange that just came out yesterday. And other than that, have a great morning. Thanks for being here. All of you who are in person, there's more bagels, there's more coffee. And these guys are still available for a while here. So thanks for coming out, experiencing the 3D experience, and join us again, hopefully next week at Pitch Day, which will be on this stage, and then in December for our next Pulse Breakfast. Have a great rest of the day.